All right, welcome to the Explainer. Today, we are going to break down something pretty wild. It's an option strategy that, based on our sources, pulled in almost 9 lakh rupees in profit in a single month. Yeah, so the big question is, how on earth did they do that?
And there it is, 8,90,000 rupees. That's the net profit we're talking about, that a trader apparently made in April of 2024, just from the options market. I mean, that's a huge number, right? It just makes you stop and ask,
how is that even possible? Especially when you hear all the time that something like 90% of options traders actually lose money. Well, the secret is to take the usual way of thinking about options and just flip it, completely upside down. So let's get into it and see how it works.
okay, so first things first. To really get how this strategy wins, we have to look at what pretty much everyone else is doing and why it's so tough. We're talking about being an option buyer. See, when you buy an option, you're fighting a battle on 2 fronts. It's not enough to be right that a stock is going to make a big move. You also have to be right about when it's going to happen. And the whole time you're waiting, the clock is ticking. And time is absolutely your enemy. And this right here is the buyer's #1 enemy. It's called time decay. The best way to think about it is like an ice cube. Your option contract is that ice cube, and every single day that goes by, a little piece of it just melts away. Its value goes down. So even if the stock price does absolutely nothing, you, the buyer, are losing money. Guaranteed.
So, if buying options is this big gamble against the odds, against the clock, what's the other option? Well, it's pretty simple, actually. You just switch teams. You become the seller.
And this just lays it all out, doesn't it? It's a total role reversal. The buyer needs that big, dramatic price move. Time decay is eating away at their investment, and honestly, the probability of winning is pretty low. But now look at the seller. Their goal is the exact opposite. They want the price to stay calm, to stay inside a certain range. And that time decay that was killing the buyer, it's now the seller's best friend. It's literally how they make money. Just by making that one switch, you completely flip the odds of winning in your favor.
You know, the source we looked at put it perfectly. It says, your bekar mein nuksan ho gaya and mere ko free mein fayda ho gaya. Basically, your loss happened for no reason, and I got a free profit. And that's exactly it. If the stock just sits there, the buyer loses their money simply because time ran out. And where does that money go? Straight into the seller's pocket. It feels like free money.
Okay, so how do we actually use this seller's advantage? Let's talk about one specific strategy that does exactly that. It's called the short strangle. And don't worry, we're going to break it down with a really simple story.
Yeah, no, the definition sounds a little technical, but the idea behind it is actually super simple. You're basically making a bet that the stock price is going to be boring. It's going to stay within a certain range. So you make 2 bets at once. One bet that it won't shoot up too high, and another bet that it won't crash too low.
All right, let's make this real. We'll use an example straight from our source material. We're looking at Tata Consultancy Services, or TCS, and let's say it's trading at around 3,900 rupees.
Now, in the market, you've got 2 people with really strong, totally opposite views. First, you've got Ramesh. He's a total pessimist. He thinks TCS is going to absolutely crash below 3,500. So he buys what's called a put option. It's a bet that the price is going to tank. Then you have Suresh. He's the ultimate optimist. He's convinced TCS is going to soar past 4,400. So he buys a call option, a bet that the price will skyrocket. The key thing here is both of them are making these extreme, low-probability bets.
So what do you do as the seller? You don't pick a side. You don't try to guess who's right. Instead, you act like a bookie. You take both of their bets. You sell that put option to Ramesh, the pessimist, and you sell the call option to Suresh, the optimist. And by doing that, you get to collect the money, the premium from both of them, right up front. And would you look at that? Here's what actually happened in April 2024. Ramesh was betting on a huge crash, more than 11% down. Suresh was betting on a rocket ship ride up, more than 13%. But the stock, it barely moved. It stayed within a 7% range for the whole month. Meanwhile, the seller, by taking both bets, created this massive 24% wide profit zone. And the stock's actual move was just sitting there, comfortably right in the middle. The seller win. This whole example really gets to the core of it, the main idea that makes this whole thing work. It's not about being a psychic. It's not about predicting things. It's a completely different way of thinking. And this number, this is the whole game right here, 91%.
For a similar trade setup on TCS, the calculated probability of profit, or POP, was 91%. Let that sink in. That means, if you made this exact same trade 100 times, you would statistically expect to make money on 91 of them.
So you see, the most important thing isn't being a fortune teller. It's not about guessing where the stock is headed. It's about setting up a trade where the math, the probabilities are just stacked in your favor right from the start.
That's really the heart of the strategy. You aren't trying to guess where the stock will go. You're simply betting on where it likely won't go. You just collect the money from Ramesh and Suresh, who are betting on those crazy extreme moves. And as long as things stay relatively calm and boring, you win.
And that really is the question to leave you with, isn't it? When you're in the market, are you trying to predict the future, or are you just playing the odds? Because shifting your mindset from trying to make perfect guesses to just playing the statistics, well, that can change everything. It's a really powerful concept, and definitely something to chew on.